Did you know Bitcoin's creator has never been found? What will you tell your kids about money in 2030? Let's rewind to 2008. An anonymous coder named Satoshi Nakamoto published a white paper that would change money forever. In 2009, the first Bitcoin block was mined. What's wild? There will only ever be 21 million Bitcoins. That's it. No government can print more. This mysterious launch sparked a revolution. But what does it mean for you and for the future of money? So here's the trillion-dollar question. Will banks embrace crypto or be left behind? The answer might surprise you. Many of the world's biggest banks are now cautiously exploring cryptocurrency, running pilot programs, and offering custody services through strategic partnerships. This isn't the resistance story many expected. It's a profound adaptation in real time, recognizing the undeniable fundamental shift in financial technology. Bank of America's CEO has even stated that the bank could launch a stablecoin and that banks will use crypto for payments if regulators provide the green light. Think about that. One of America's largest traditional banks is openly discussing cryptocurrency integration. This isn't just talk, it's a clear sign of changing tides and mainstream adoption. But here's the key insight. Banks want clear regulatory frameworks before diving in completely. This means adoption will be gradual, methodical, and ultimately more sustainable. They are prioritizing stability, security, and compliance for their vast customer bases. We're not seeing a sudden revolution, we're witnessing a calculated evolution of the financial system. The banks that recognize this shift early and adapt their infrastructure accordingly will thrive, securing their place in the digital economy. Those that resist will find themselves increasingly irrelevant in a world where value can be transferred instantly globally without traditional intermediaries. Their business models will simply be outpaced. Now, let's address the elephant in the room. How could crypto truly become real money for everyday use? The data is already telling us a compelling story. Surveys show that 52% of people believe cryptocurrency will be an important future payment method. This isn't a fringe opinion anymore, it's mainstream acceptance building in real time, signaling a shift. But here's where it gets truly interesting. While public sentiment is shifting rapidly toward acceptance, regulators remain understandably cautious. This tension creates a unique opportunity. Stablecoins and central bank digital currencies are emerging as crucial bridges, connecting traditional trust systems with innovative blockchain technology, offering stability. Could Bitcoin or other cryptocurrencies become everyday currency? The infrastructure is already being robustly built. Payment processors are actively integrating crypto options. Merchants are readily accepting digital currencies. The question isn't if, but when and how quickly this transformation will unfold. What we're seeing is the powerful emergence of a parallel financial system that operates alongside traditional banking, gradually gaining legitimacy and widespread adoption until the lines between crypto and money begin to blur. Let's talk numbers, because the projections are staggering. These aren't just forecasts. They signal a profound shift in global finance. Bitcoin recently hit an all-time high of approximately 73,800 in 2024. But here's where it gets truly exciting. Some analysts predict Bitcoin could reach six figures or even over 1 million by 2030. This isn't mere speculation. It's driven by increasing scarcity and accelerating institutional adoption. Now, I want to be clear. These are speculative projections, but they're based on fundamental analysis of adoption curves, institutional investment, and monetary policy trends. Ethereum presents equally compelling possibilities. Conservative estimates suggest it might reach around 40 by 2030. That's roughly a 10x increase from current levels. Its foundational role in decentralized finance and NFTs underpins this potential. Solana, with its high-performance blockchain capabilities, could approach 10 by 2030. Its speed and efficiency are attracting significant ecosystem growth. But here's what's crucial to understand. These aren't just random price targets. They reflect the underlying value creation happening in decentralized finance, smart contracts, and blockchain infrastructure. We're not just speculating on digital tokens, we're investing in the future of programmable money. The key is recognizing that cryptocurrency valuations reflect the growing utility and adoption of blockchain technology across every sector of the economy. Here's a fact that will blow your mind. Over 420 million people already use cryptocurrency today. That's more than the entire population of the United States. This isn't just a trend, it's a global financial shift. Imagine this scenario. You wake up tomorrow and pay for your morning coffee with Bitcoin. You use a DeFi app to earn competitive yield on your savings. You buy concert tickets as NFTs that also serve as secure digital identity verification. You send money to family overseas instantly with minimal fees using a stablecoin, ensuring funds arrive quickly and affordably. This isn't science fiction, this is happening right now in countries around the world. In many developing nations where traditional banking is often inaccessible, cryptocurrency is already being used for real transactions, vital remittances, and crucial wealth preservation. DeFi applications are creating entirely new financial products. NFTs are evolving beyond digital art into practical tools for identity, ticketing, and verifiable ownership. People are budgeting and investing in cryptocurrency alongside traditional fiat currencies. The transformation is happening gradually, then suddenly. One day we'll realize that digital currencies have become as natural and indispensable as using a credit card or mobile payment app. So what will money look like in 2030? Market forecasts project a cryptocurrency market capitalization of 11.7 trillion by 2030. To put that in perspective, that's larger than the entire GDP of China today. This monumental growth signals a profound shift in global finance. Picture this future. Every smartphone has a built-in crypto wallet. Imagine seamless, secure transactions for everyone, everywhere. Bitcoin, Ethereum, and Solana are accepted at mainstream retailers worldwide. Your salary might be paid partially in cryptocurrency. International transactions happen instantly without traditional banking intermediaries. This dramatically reduces costs and speeds up global commerce. We might even see the emergence of quantum-resistant cryptocurrencies, preparing for the next technological revolution. This ensures long-term security against future computing threats. Central bank digital currencies could coexist with decentralized cryptocurrencies, creating a rich ecosystem of digital money options, offering unprecedented choice and financial flexibility. But here's what excites me most. Just as the internet became invisible infrastructure that powers everything we do, cryptocurrency will become the invisible financial infrastructure that powers global commerce. It will simply be the underlying rails making transactions faster, cheaper, and more accessible for everyone, everywhere. The challenges are real. Regulatory frameworks need developments. Scalability issues require solutions, and user experience must improve. But these are engineering problems, not fundamental flaws. They are solvable with dedicated innovation and collective effort. By 2030, cryptocurrency could be the new digital dollar. The question isn't whether this transformation will happen, it's whether you'll be part of it. I want you to think about this. We're living through the most significant monetary revolution in human history. The decisions we make today about understanding, adopting, and integrating cryptocurrency will determine our financial future. This isn't just a technological shift, it's a societal transformation. So here's my question for you. Do you think traditional banks will disappear by 2030, or will they successfully adapt to this new digital economy? Let me know in the comments below, and if you want to stay updated on the latest developments in cryptocurrency and disruptive innovation, make sure to subscribe and hit that notification bell. The future is being built right now. and I want to make sure you're part of the conversation. Remember, in innovation, timing isn't everything, but understanding the trajectory of change is. And right now, that trajectory is pointing toward a world where cryptocurrency isn't alternative money, it's just money.